will now move into the final section on financial reporting, and the first area we will talk about is the requirements and the timelines. Year-end financial statements are required by Section 171 of the MGA. It is the most important tool for reporting on the financial position of the municipality. It's something that can provide accountability and transparency to the residents. The Municipal Financial Information Return is a requirement of all municipalities. I know it is somewhat complex, and certainly time doesn't permit going through the return during this session, but the link is provided in the pre-session package in the online resources. This is a tool, and we often wonder about the purpose of it and how it is used. It is used by Municipal Affairs to generate municipal statistical reports at the provincial level, because it does provide that consistent comparison across municipalities. But it is also used to meet the reporting requirements of Statistics Canada for national reporting that they do on municipalities. There is two versions that exist, one for municipalities with utilities and one for municipalities without. Reporting dates to keep in mind. By June 30th, you should have received your audited financial statements from your auditor. Council then approves those audited financial statements. But July 15th, you need to submit your current audited financial statements along with the auditor's report and the municipal financial information return to council and to the minister. By July 31st, you must make the financial statements public to your residents. We will talk a bit about understanding the financial statements. I'm not going to delve into this in depth, but it's always important to understand what each statement is and its purpose. Municipal financial statements report on the financial activities and balances. They help ensure accountability and transparency, and they're useful to assist municipalities with long-term and strategic planning. They are an important tool for municipal council and administration to use to report to the taxpayers on the municipal services provided with the resources at their disposal. Number of required statements, and I'll touch briefly on each of those. Statement of financial position reports on the assets, so what the municipality owns or controls, the liabilities, what the municipality owes, and the accumulated surplus, which is what remains after the assets have been used to meet the liabilities. The statement of operations reports on revenues, expenses, and the results for a fiscal year or reporting period. Statement of changes in net financial assets explains the difference between the annual surplus or deficit and the change in net financial assets, and reports spending to acquire tangible capital assets and inventories of supplies, and reports disposal of tangible capital assets and the use of inventory. Your statement of cash flows identifies where the cash came from and shows how the cash was used, and provides details on changes in cash and cash equivalents since the previous reporting period. Notes and schedules provide additional detailed information for the reader. Typical notes to financial statements include information on accounting policies, cash and investments, deferred revenue, employee benefit obligations, debt and debt limit information, tangible capital assets, and the accumulated surplus. So there's a lot of details in the notes and schedules, and they are a really important part of the overall package. Also, you'll see in your audited financial statement, you'll get a management letter stating that it's the management's responsibility for the financial statements, and explains even though the auditor has prepared the package, that the financial statements are the responsibility of management, and that management maintains a system of internal controls that is monitored and evaluated. It also explains the process that was followed in regards to meeting with the external auditors to review and approve the financial statements. Also, you'll find an independent auditor's report, and this report outlines the auditor's responsibilities, the scope of the examination, and the auditor's opinion on the financial statements. So there are three types of audit opinions you should be aware of. An unqualified opinion or a clean opinion, and that means that the financial statements present fairly in all material respects the financial position and the results of the entity. A qualified opinion, in that case the financial statements contain material misstatements or omissions. And an adverse opinion, the third kind, the financial statements do not fairly present the financial position, the results of operations, and changes in financial position as according to generally accepted accounting principles, and the reason for this adverse opinion is provided. Some questions to think about when you're reviewing your financial statements. Are there long-range planning or budgetary issues the municipality needs to address? Are there some red flags in the financial statements? Potential red flags may include things like a significant decrease in the municipality's cash position from the previous year, a restricted surplus that exceeds the amount of cash and cash equivalents, a significant decrease in the net financial assets from the previous year, or a significant increase in the net debt from the previous year. How did the current year's financial decisions and operations impact the overall financial position of the municipality? More questions to consider. Does the municipality have sufficient working capital? What is the remaining useful life of the municipality's tangible capital assets? What is the content of the auditor's management letter? Is there a clean audit report? Are there any items of concern that need to be mitigated or addressed? Have the municipality's financial statements been sufficiently communicated to the residents and businesses in the municipality? The statements are an important part and certainly a requirement of the MGA. Moving now to the financial reporting audit requirements. Sections 172 to 176 of the MGA deal with the audit requirements. An auditor must be appointed and must provide a report to the CAO by June 30th. Access to records, documents, and other items from the financial reporting system must be provided to the auditor, and the council, CAO, and employees must provide information and explanations to the auditor. There is certain information that the auditor requires to do their job. This is important as it can really help the auditor to do their work efficiently. So there's financial overview, which is really an executive summary of your operations for the period, and it assists the auditor in interpreting your financial information. So a short memo outlining the major events of the period and how they have affected your financial results is helpful. Providing explanations of significant changes in revenue and expenses during the year, comparing current year actual amounts to prior year actual amounts and writing explanations for the differences is helpful. A trial balance, so an electronic copy of your trial balance at year end containing the account numbers, full account descriptions, and the final account balances at March 31st. Cash related information such as the March bank reconciliations for all bank accounts with supporting detail, subsequent bank statement and canceled checks for all bank accounts, a list of all bank accounts that were opened or closed during the year, a copy of all banking agreements, details of cash funds on hand, copies of certificates for term deposits or other cash equivalents, a schedule of transfers occurring between bank accounts for 5 days before and 5 days after the year-end date, and a schedule calculating the average bank balance for the year and an explanation for any significant variances during the year from that average balance. Accounts receivable, a detailed aged accounts receivable trial balance reconciled to the general ledger, a listing of accounts where collection is uncertain, accounts payable and accruals, detailed aged accounts payable trial balance as at year end reconciled to the general ledger. Copies of specific invoices for accounts payable outstanding at year end will be requested. A listing of any accrued liabilities. Copies of returns, statements, and assessments for the period concerning source deductions and other payroll liabilities. Copies of HST rebates filed for the year. A listing of employees noting sick days accrued, used, and the balance at year end, and any accrued wages at year end. For prepaid expenses, a copy of invoices supporting prepaid expenses. Additional information required includes capital assets, so a listing of all the asset values and estimated useful life to comply with the new public sector accounting regulations. Copies of invoices supporting disposals, a listing of additions during the period, calculation of amortization expense for the period. Deferred revenue, so a detailed listing of deferred revenue if applicable and reconciled to the general ledger. Long-term debt, so a continuity schedule of long-term debt showing opening balances, advances, repayments, and closing balances. Documentation pertaining to any new loan proceeds. Then contractual obligations, contingencies, and subsequent events, so commitments for material purchases, capital expenditures, performance guarantees, any events occurring subsequent to the period end that may impact future operations. And for revenue and expenses, we need copies of funding agreements, invoices for all expenses over $5,000, all documents relating to infrastructure projects. So quite a detailed list that is required. Additional requirements would include copies of your bylaws and corporate documentation, copies of the annual operating budget, copy of the personnel policy, copies of all lease agreements. So typically your auditor would be in touch before going out to do the audit, and the list that they develop would include a lot of these items, but of course would be more specific to your municipality.